Good morning, good morning. How you guys doing? Nice to see you guys. A little bit of Mozart this morning to help us start our days, get our mind in the right mindset, get our brains ready to dig into some data here. Today I wanted to take a look at the latest set of CFTC data, as you can see on the chart. That's what I have up. This data was collected on April 9th, 2024. And even though that was 9 days ago, it's still extremely relevant because it gives us a good insight as to what the institutions have been doing with their positions. So we're going to take a look at that, as we always do. And as you've seen over the many months, many years, it's very powerful to look at the CFTC data and get a glimpse of what the institutions are doing with their positions. Because remember, the institutions take time to offload positions. Okay, they can't get in and out as quickly as we can. They're dealing with massive size. So when we know what they're in the process of doing, it gives us a really good look at what is likely about to come. So we're going to do that today. We're going to look at that. And, you know, as I always like to start off with, I like looking at the big snapshot of the positions first. I like doing that because I'd like to just get an overview of all the major assets that I trade. And you can see on the left-hand side, all those assets. Looks like my video is covering a little bit of it. Let me just move that. But you can see US dollar, Aussie, US CAD, all the major currencies on the left here. And then below it, we have gold, silver, copper, oil, S&P 500, NASDAQ, the Dow Jones, and bonds. Okay. So I like to start off by taking a look at the change column. Why the change column? Change column is important because it gives us an overall perspective of what has changed over the past week, comparing this last week's data with the data prior. Okay, so that gives us a good overview of what took place over the last week. So when I look at this column, I will highlight it for you right now, this one right here. What I'm looking for are big numbers. And the biggest numbers I see are for bonds. So bonds bearish, S&P 500 bullish, copper bullish, US dollar, Japanese yen bullish, euro US dollar bullish. Okay? Those are the ones that stick out. So bullish, 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 bullish. And the last one bearish, bonds bearish. Okay, bonds bearish. And we know why bonds are bearish. A lot of talk recently about interest rates not being cut in the amounts that they were thinking at the beginning of the year. First, we were told maybe 3, maybe 4. That it was going to start in March, then maybe June, now maybe at the end of the year. So a lot of talk about the rates not being cut as often as we were initially told. Okay, so this is the first thing I look at, is this. All right, and then after that, I start looking at the pairs individually, and we start off with gold. And with respect to gold, we can see that they were extremely bullish, have been for several months now. And we've been pointing that out for some time. So they piled into long positions at the beginning of March, 264, 283, 278, 265, 281. Okay, a little bit of profit taking now, just a tiny bit. Nothing that would, you know, excite me or get me expecting a larger pullback at this point. But one thing I will point out is the coloration of the cells. Always very important to take a look at the coloration of the cells here. And the reason why I think it's very important is because even though price has been heading higher, and even though we have the institutions adding to their longs, look at the coloration of the cells here. You see that? That's blue. Coloration is blue, right? And if you look really closely, you can see that just over here, they were red. You know what that tells me? We went from slightly bearish into more neutral territory. So even though we got this really nice move to the upside, the overall bias by the institutions, this is neutral. They're neutral, okay? And how is that possible? Well, I'll tell you, a lot of time and effort went into building this spreadsheet. Okay? A lot of analysis, applying logic, things that we weren't taught in school. When you apply logic, when I applied logic to the chart, to the spreadsheet, when I created it, I thought to myself, well, just because they're adding more longs and shorts, it doesn't necessarily mean that they're bullish. You'd have to put things into context, right? If they were extremely bearish and then they started piling into longs, it doesn't necessarily mean that price is going to go higher. And just like in this case, just because they're piling into longs and shorts are not aggressive doesn't mean that they're extremely bullish. You see, back in October 2023, we were bearish. And you see the coloration of the cells here? They were red. So there was a bearish bias at that point. But we went from bearish to neutral, and we have not yet gone into bullish territory. Yeah, we went slightly into bullish territory right over here, just slightly. If you take a look here, 80%, slightly. Okay, but when you look at some of the other assets that we follow, and you look at their columns, the ones that are bullish, you can clearly see that they're bullish. All right, let me just zip over to US dollar Japanese yen. Do you see that? That's bullish. You see the coloration of the cells? There's no doubt about it. Okay, there's no doubt that they're bullish. And when you look at price action, you can see the clear bullish price action. Okay? Aggressive, strong. The foundations have been placed in price to support the move to the upside. Everything has been built up slowly, progressively, sustainably. That's the big thing. Okay, so let's go back to gold. Let's go back to gold. Okay, so slightly bullish, a little bit, a tinge of bullishness, but overall, neutral. So what does that mean? Well, that means, if you're going to buy gold, you better buy on time frames that are being sustained. This is why I was talking to you about the 4-hour chart. Okay, on a couple of videos ago, we were talking about the CFTC data, we were talking about gold, and I said, listen, if you wanted to buy gold, you'd have to be buying it off of the 4-hour chart. Because the 4-hour chart is a smaller time frame, and any new demand that comes in, yeah, likely it's going to hold. If things start shifting to the downside, it's going to be the 4-hour chart and their demand zones that are going to start to break apart. And so we had a 4-hour demand here, long signal, 4-hour demand here, long signal. You see how they're holding so far? You see how price came into those areas and they're holding? Okay. First here, now here. But with this first test of this demand area, I want you to see how the previous highs were surpassed immediately. That's a good sign for continued move to the upside. Whereas here, price is struggling. Okay, you see it struggle? It's not surpassing the previous high as it dropped down into that institutional area of demand. So this is not a good sign for this area of demand holding, especially when we have a lot of evidence to suggest that the euro is going to be dropping soon. Okay, so these are the things that I see when I'm looking at the data. All right. So neutral. Bullish overall on the higher time frames? Yes. Yes. We got some good structures. Decent. Oil? Bullish. You see that? There's no doubt about it. Look at the longs. Just increasing and increasing and increasing pretty steadily. So what do we end up having? Look at the bias here. Okay? We went from neutral. Now we're going strong. Look at shorts. You see when the bias turned bullish, you see what happened with short positions? You see what they did with short positions? You see how blue, you know what blue means? Cooled off. Blue means cooled off. That means they unloaded a bunch of their positions and they're not really focusing on that direction. So shorts are cooled off. That's what it means. So they cooled off on shorts and they piled into longs. Bullish bias, plain and simple. So when we're looking at this template, when we're looking at our spreadsheet, we see bullish bias. We look at the chart. Look, pure and simple. Move to the upside ever since demand came into play. Okay? That's been the bias for the longest time since we contacted demand. And if you've been following our videos for the longest time, you'd know that we've been talking about this for months. So we're not really surprised with demand in play. The bias was always to the upside. So now you see it moving to the upside. And look, you know, there's a lot more room until supply gets contacted. A lot more room. For me, this looks like it's just getting started. So higher gas prices? Yeah, probably higher gas prices. Does that suck? Yeah, that sucks. You know, I think our gas went up 14, 18 cents overnight. Yeah. And it was already last night when I was coming home from my pool night, I saw $1.70. $1.70. A liter. Oh, what fun. US dollar. So remember what I was telling you about the US dollar? That it's giving us some contrary signals here. But because it's not in line with all the other dollar pairs, I said ignore it. Don't worry about it. Yeah, look, if we look at shorts, what do we see? That they've been increasing, right? They've been increasing their shorts quite aggressively. And you look at the coloration of the cells for long and shorts, yeah, somewhat red, bearish, right? But what did we get with price? Move to the upside. Oh, how did that happen? See, if you were only following the data and making trading decisions just by looking at the data, you'd be thinking, oh, they're piling into shorts, so price is going to drop. Nope. Price rallied. Why did price rally? Because that was the overall direction of the dollar pairs. That's why. Gold was meant to drop, so dollar's going to rally. Plain and simple. So that's why I told you guys, ignore it. Look at US CAD. Remember I was telling you? Bullish? We're going to look for bullish signs? Well, those members who are members with us who have been reading the EURUSD reports, I've been saying for a long time, watch for signs that this is going to continue higher. We're watching for signs that the institutions are going to continue building on their long positions. What's the coloration of the cells here? Green. We went from reddish tinge, bluish tinge, and now we have bullish. Okay, this is a bullish signal. Now we don't just trade off of colors. It has to match the supply and demand that is taking place on the charts. And it definitely is playing to the upside, just as we had suspected. Okay. Now at the highs, retail traders were getting in too aggressive with their short positions, and this is the reason why we're seeing that drop. Just like the same thing with the euro, right? They were getting too aggressive with longs, so they eventually had to pile or close out of those positions. U.S. Swiss bullish, just as we had been suspecting. Look, piling into long positions. Look how many weeks in a row they were piling into longs. Aggressive. You see how the coloration of the cells were becoming more and more red? That means they're getting aggressive with their positions. 29 to 48 over the last 5 weeks. Aggressive. So coloration of the cells here in long percent and short percent. You see how it was somewhat neutral here? Now bullish. Okay. And what do we see with price action? Straight up. This is what we've been saying. So, nice price action here. And same thing, look at the retail sentiment. 90% bearish. They were increasing. They went from 80s here. They pushed price up, and then they added to their shorts, getting them up into the 90s, which is what got them in trouble, because eventually they're going to bail out of those positions, and they're going to go in long, and then the banks will drop price. Euro US dollar. Here's the one that we've been tracking very, very closely. So when we look at the data, what do we see? In terms of longs, I told you, if you've been watching our videos, the banks are focused on offloading their long positions. I've been saying this for the longest time, if you guys have been following us on our YouTube channel. Okay? Back in December, 235,000. I said, guys, 235,000 is very close to their all-time maximum long position of 266. So what do you think is going to happen? They're going to start taking profits on their long positions. So even though there were times where price action on the euro was looking very bullish, and people were like, oh, but it's looking very bullish, it's looking very strong. Right, but the banks are near their maxed out size long positions. They're not going to add any more. You know, yes, there's a chance sometimes that they'll reach maximum size and surpass it, but that doesn't happen very often. When we reach max size, typically 95% of the times they're going to take profits on long positions. So it's not the time to be focusing on getting in long. This is one of the most powerful ways of determining whether you should even be opening a long trade or a short trade. You know, people all the time, oh, the data is delayed. How is it useful? Well, look at the grand scheme of things. How is it useful? You know? So you would know not to go long when the banks are offloading longs. Do you want to buy something when those that are controlling the market are getting rid of something? No, you know. So they were offloading long positions, and a lot of retail traders took on those long positions. That's why we track retail sentiment, because we can look at where are those key areas that the banks are offloading those long positions. They do it in chunks. Like I said, it takes a while for the banks to offload positions, right? They can't just do it quickly. So every time you see on my charts these groups of green colors, this is the banks offloading their long positions, guys. they cannot push price down unless they offload those long positions. So they're going to keep price high and slowly lure retail traders into getting in those long positions. So you see it here, you see it here. You see it very much here, and you're seeing it very much here. Okay? And then they need to acquire a short position because they're planning on dropping price. So what do they need to do? They need to lure retail traders into acquiring short positions and then offloading those short positions to the banks. So they did that up here. They did it up here. They did it up here. And recently they did it up here. Okay? So you see how that works? Okay, so now let's look at the data. So they're offloading consistently long. So you see that's consistent if you look at the long column. Consistent. Look at shorts. They piled into some shorts and then they offloaded some shorts. Then they piled into some shorts. Why are they doing that? Well, you have to understand there's that exchange back and forth that sometimes retail traders want to add back into their shorts. So the banks have to give them some of the shorts. Then they're going to get rid of those shorts. So then the banks take on those shorts. But the one thing that's very steady over time is they're offloading long positions. Okay. Pound, same thing. Look, offloading long positions, 123, now we're at 80. Are they accumulating shorts? Not really. US dollar, Japanese yen, bullish. Very bullish, as we were showing you. Look at the long column, 157, 182, and 189, 198, 209. Aggressive, very aggressive. Remember I told you, over time, this is going up. Over time, just creeping on up. So very bullish. And if you look at the column here, they've been bullish for a long time. The only time this turned neutral is when they were profit taking on their long positions in preparation for getting back into long positions. All right. Last but not least, this one, it's not anything amazing to see, but I did say that we're likely going to see price head lower because of what's taking place with the euro. And so, as you can see, that is what's taking place. Longs, they've already offloaded their longs. They're cooled off now. There's no focus on them. And they're adding to their shorts. Hence, we're starting to enter into bearish territory. You see the coloration of the cells here for long and short? Bearish territory. So, look at price action. Bearish engulf. You think it's going to continue heading lower? Likely. Likely. Okay, folks. All right. So I think you're set up. I think you're good. All right. For the rest of the week, we're good to go. Good. Great. Well, then I will leave you with that. I hope you guys enjoyed today's episode, and just wanted to go over that CFTC data with you, like I was saying, and hopefully it gave you some better insight as to what's been taking place, what the banks are doing, what the overall context of the market is right now, and now you're better prepared to trade alongside the big institutions. And if you want more help with that, and you want entries and all that good stuff, then come and join us, www.whiteoakfx.com. Come and join us and learn. All right, there's only so much that I'm going to be offering to you guys on these channels. When you get inside and you start doing the classes with us, you'll start to see how this all gets put together. All right, ladies and gents, that's it. Enjoy your day. Thanks for joining me. Take care. We'll see you tomorrow morning, all right?